What is good, guys? It's Rey-Jay back with another video. And in this one, I want to break down what's going on with Tesla, SPY, Nvidia, the QQQ, and a couple of other tickers. I want to talk about what's happening with the news as we have so much big data coming out that's going to affect the markets for tomorrow. I'm going to talk about the PPI report and what's happening with the FOMC minutes, which are all once again coming out tomorrow. But before I break anything down about all this information, before I get into any more details, let me just mention a couple of things. I am firstly not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link, which is down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you are guaranteed up to 5 free stocks. Now, the offer ends in just about 5 days from now, so check it out before they run out. Anyways, let's break down what's going on with the market so far. So just as a quick reminder, guys, we have some very big stuff coming out for the markets. I want to first start by talking about some earnings. So we don't really have anything for tomorrow, but just as a reminder, for Thursday, we have like Delta and a couple of others. And Fridays when things get real with earnings, because we have JP Morgan Chase, we have Citi, BlackRock, Wells Fargo, and a bunch of big earnings starting. Besides that, however, tomorrow is going to be another very, very important day because when the market is, I'm sorry, not when, but before the market opens, an hour before open, we have the PPI data coming out, and this is going to be a leading indicator for CPI. Now, core PPI year over year, right? This is another wholesale inflationary measure that's quite important for the Fed. This, once again, for core, this is going to be very important and it's going to be expected to be around 2.2 to 2.3%. If it's higher than that, that could cause the market to not really like the data and possibly cool off. If it's as expected, the market could still hold. So we want to be watching that very, very carefully. Once again, we want core to be 2.2 to 2.3%. And then for PPI year over year, you want this to be around 1.6 to 1.7%. Anything higher than that could become a little bit more bearish for the market. So you want to be very careful when looking at all this data coming out for tomorrow. Now, I warned everyone that, look, this data is coming out 1 hour before the market opens. So if you want to hold anything, right, it was your choice. If you wanted to just get out of any positions and just kind of like play it safe, that was also your choice. It's always up to you guys. I just wanted to give you guys the warning about this. We don't know what this may cause by tomorrow's open. Then we have Waller from the Fed giving a speech at 10:15 a.m., which is not like that crazy, alongside Bostic later on. But then the biggest thing for tomorrow after PPI is going to be the FOMC minutes coming out at about 2 o'clock p.m. Eastern time. Okay, this is going to be very important. Now, what is so good about the FOMC minutes? It's not a typical FOMC meeting. It's actually going to be like a summary of what happened during the FOMC meeting. And it's going to give us more insights about what the Fed members want to do about monetary policy, about interest rates, and etc. So this is going to be very important, and whatever data comes out is going to cause a very big move for the stock market. We saw what happened when Jerome Powell was speaking. The market came down very hard. So this data could cause a very big move. It could pump the market very hard. It could cause the market to sink very hard as well. So the best thing to do is just be prepared for this and make sure you're ready. I'm also going to provide you guys with a warning about this tomorrow, just in case you guys forget, and in case you guys are like not really there. So this is going to be very big for the market. It's going to affect how the market moves. Now, when it comes to the market, guys, one of the things I did in my second video today was I warned you all about the fact that we have some rising wedges on SPY and Aapl, and we also have one for the QQQ. So with these developing, it's going to be very important for tomorrow. Now, when it comes to SPY, now we have this very clean looking rising wedge that has developed, okay? If we're bearish tomorrow, it's going to depend on PPI. And it's also going to depend on the FOMC minutes. So if we start off bearish, we have to break below this support, this trend line right here. And if we break below it, there's a risk of this thing coming back down to 433. If that fails us, we could come all the way back down to 430 if we get a big rug pull. If we get a bounce off PPI, right, it all depends on the data. I can't truly predict that. If we bounce, then we could get one more attempt to try to get back up to 438 to fill the gap before we eventually break down. But so far, the formation is looking like there's downside likely coming. So I just want to warn you about that. I don't know if we're going to get a bounce first and then we start cooling off, or if we just cool off from here. Either way, there's likely downside coming. I just want to warn you about that. All right. For the QQQ, same thing is developing. The same thing. We have another rising wedge like pattern developing on the QQQ. If we're bullish, we could get a bounce after PPI. If that does happen, we could retest like 370. That's going to be a level to watch, and then also 372 before we end up sinking lower. Or if we end up bearish after PPI or even the FOMC minutes, you want to see this thing break below this support right here around 368, especially for tomorrow. If we break below that, this thing could start coming down to 366 and potentially even lower levels than that. So the reason why 366-ish, I think it's like 365 to 366, is going to be very important is because off this rejection right here from a couple of days ago, this is where we had the previous resistance. So this is going to become support around this 365 zone, 365 to 366. So we're going to be watching that very carefully. If we break below 365.67 specifically, there could be even more downside coming. So there's a risk of that. So we're going to be watching these levels very carefully. But just know that this pattern does tend to lead to bearish outcomes, and there's a risk of that for the market going into tomorrow or Thursday, as we have CPI coming out for Thursday, and then tomorrow's when we have all the other pieces of data. All right, so watch this level carefully. We'll see if we bounce or not. If we break below this, that's going to be our confirmation. There's downside coming, so just be very careful. And make, excuse me, and make sure you watch 365 to 366. And if we break below that, there could be even more downside coming towards the 361 area. So be very careful with the QQQ. To add on to this, we have Tesla stock, which is also looking a little bit different. So for Tesla, we're still in this range right here. You can see that Tesla's been in this range, going back and forth right here. So far, it's holding up quite decently, but there is one thing that concerns me a little bit. I'm going to actually use Weeble for this part. On the 4-hour time frame, okay, hopefully this is like clear enough to see. I want to make this like very, very easy for anyone to like read. But anyways, we have a bearish divergence developing on Tesla. Now, it doesn't mean we have to sell off immediately. It does not guarantee that. We have to wait and see if Tesla breaks below like 262, then 260 to get that confirmation. For now, there's no confirmation yet, but there is a bearish divergence developing that tells us that there's a risk of downside coming soon. Right? The MACD and the RSI are both telling us that. I need to see how we open for me to confirm if we're going to be selling off. So we'll have to wait and see, but there is going to be a risk of downside eventually. Now, there are two possibilities that I would say are probable. Number one could be like we get a little pump first, try to break this high, and then we still maintain the bearish divergence, and then we eventually get the sell off afterwards. Or we could just sell off from here. That's what this chart is suggesting. The odds do favor a sell-off eventually coming, so I want everyone to be very careful with Tesla and all these different stocks, and especially because of all this data coming out, especially with CPI. So be very careful. We will see what happens over the next couple of days. Now, to add on to this, we also have Nvidia. Nvidia has a very strange looking possible rising wedge, but it's not as clean. So you guys can see it like right here. Now, for Nvidia, we're going to be watching this trend line as critical support, so right here. If Nvidia breaks below this very, very mid at like 450 area, I could see Nvidia sinking towards 451. If we hold and we bounce off of this, then we could continue to hold up and maintain this like shop zone around this like 460 area. But for now, Nvidia is developing a potential bearish structure that could lead it to selling off with Apple and the market just temporarily. Okay, so there is a risk of downside that's starting to form. We will see if this continues to develop, and we will see if it's either PPI or CPI that causes that, or the FOMC minutes. So just be warned, there may be some downside coming to the market because of that. And if Nvidia ends up breaking below the mid 450s, 455 or so, there's going to be a risk of it coming down to the very low 450s. Be very, very careful. If we are bullish temporarily, you're going to be watching resistance around this 463 area if we break above 461. And then if we break that, then 465 is the next level. But I just wanted to warn you about that for now. Last but not least, when it comes to what I'm going to talk about on TradingView, I just want to warn everyone that Apple stock, it's also looking bearish for the setup because we have a rising wedge forming again. With the rising wedge, okay, if Apple ends up sinking below, in my opinion, this like 177.5 area, so like right here, it's going to start sinking towards 176.5, maybe even down to like 175. There's a risk of downside for Apple. I want to warn you about that if we start breaking down immediately. If we bounce first, we could get a retest of like 180 and then we start breaking down. So just be very careful and watch for the break. We want to see if we get this break or not. So just be very careful. We will see what the market does and just be prepared for what's about to happen. So watch 188 as resistance, watch 177.5 as support. If we lose that support right there, there's going to be more downside. And the odds do favor downside because of this rising wedge. So we'll see if this develops or not and see if we get the break for now. But that's pretty much it for TradingView. I'm going to now switch to Webull and just try to quickly go over the rest of the stocks I have. Just real quick, we also have Microsoft, which ended up closing a tiny bit in the red. It was actually holding up very nicely for today, but notice that it also established a bearish divergence and started selling off early. So if we sell off more tomorrow, we could see this thing come towards 325. So watch that as key support. For resistance, watch 330. There could be a little pop then a drop, but there is a risk of downside. So be very careful on this 4-hour time frame. I could see 325 on it. For AMD, this thing actually went up. So this 110 area, we were talking about this over the last few days, this thing potentially pumping as we had this inverse head and shoulders. So we got the move we were talking about. But the problem is we have some critical resistance very close to about 112 or a little bit below that. So either very close to right here, we might see this thing start sinking, or it could pop a little bit more and then start sinking. We have a bearish divergence developing, so watch this thing eventually come down to 106, then 105, and potentially even 104 below that. So we'll see if we get one last pop and a drop, or if we just drop from here. There's going to be a risk of downside, so just be very, very careful. For Netflix, it also came down. I wasn't really expecting it to sell off this early, but we ended up forming a bearish divergence right here. And with that, it ended up selling off. So watch this 366 support. It could be testing that very soon. The VIX, even though the VIX has been dropping, we're very close to this 50 EMA support on the 4-hour time frame, and also on the 30 minutes time frame. The VIX just so happens to be it just happens to be at this very, very critical support right here. So we're very close to this like 16.5 area. 15.8 is another area the VIX has bounced off of in the past. So we'll see if this bounces or not. The dollar, if you look at the dollar, this is developing a bullish divergence right here. So there could be a chance the probably is going to pump back up to 106, which could slow down the markets, or it drops a little bit more. If it maintains this divergence, then it could pop a little bit later. But there may be downside coming soon. I would say over the next couple of days, possibly, maybe even tomorrow, possibly. Depends on the data, of course. For Coinbase, we were talking about this thing breaking above 80, and that's what happened today. And now, it's approaching this really tough resistance around this 80 to 82 area. So we will see if Coinbase can try to break this or not. But for now, I would just be very careful because it also has a bearish divergence on the MACD, also on the RSI. So with that establishing today, if you want to remain bullish, we have to hold above 79 or the 50 EMA. If we break below this, there's a risk of it coming back down towards 76. So if it breaks below 79, watch for it to come down to 76. If it holds it, there's a chance it can try to get back above 80. But for now, the odds do favor downside looking at the current setup. For Google, this is also, and I warned you guys about this yesterday, this thing could get a rejection off this 140 area. We have some very, very tight resistance up there. And we happen to have established a bearish divergence. So same thing on Google, right? Same thing is developing right now. I would say that I'm going to look at the 4-hour just to double check this. So I would say that we're about to get a bearish cross in the PPO of the 4 hours. So there's a risk of some downside. Maybe we gap down tomorrow or we kind of cool off a little bit. I think it could be retesting 137.96, if not 136. So watch that very carefully. The 10-year treasury yield has been sinking quite a bit, but on the much smaller time frames, you will notice that there was a tiny little bullish divergence, but nothing too crazy. We will see if this thing bounces or not. If it ends up getting some kind of bounce, this could lead this thing to bouncing. And if that's the case, it could slow the market down, right? So we want to be very careful with this. I do see a possible slanted inverse head and shoulders, but nothing else. So we're going to be watching the 10-year. If it manages to break above 46.5 or the 50 EMA, there's going to be some potential for it to try to break that resistance. If it gets above 46.82, then it could start pushing even higher to make an attempt to fill this gap. So if it ends up bouncing a bit, that could be a bearish signal for the markets. It has a bullish divergence here. Not like that significant since it's on the 5-minute time frame, but we'll see about that. For Amazon, just like Google, this thing is trading kind of flat right now. If we're bullish on Amazon, we want to see Amazon try to get above 132. But for now, I do want to warn you all that on the 5-minute time frame and also the 30 minutes time frames, we happen to be looking very stationary. I'm not getting the same sell signals on Amazon. So it's going to be dictated by the markets. It's actually looking a little bit better than some stocks out there. So if it bounces off the 20, we could see this thing pushing for 131 plus. If it rejects off this, 128 could be coming. But I would say that so far it's holding up quite nicely and does not look as bearish as other tickers out there. So we'll see what happens with that. But then for Meta, I do want to warn you that Meta, of all things, is once again, it hit this very, very important resistance, kind of rejected off of that. If it breaks below 321.5, we could see it sinking towards 320. So watch that very, very carefully. And we will see how it gets dictated tomorrow. That's going to be very telling. I'm not seeing anything new for now. We need to see how this thing could try to hold up. There is a possible rising wedge here that's developing. So if this does get a break to the downside and breaks below, I would say like this 318 to 320 area, then we could see it sink towards 315. We will see if that ends up being the case. But for now, I'm just going to be very patient with it and see what happens tomorrow. All right, guys. So we have lots of data coming out tomorrow. We will see how this affects the markets. So be ready and be prepared. I will give you guys an update when PPI comes out. So we'll see what that causes. And for now, just get ready for some high volatility. All right. Thank you for listening. I'll see you guys tomorrow. Markets to the moon because the long term is still very bright despite these short term fluctuations. And peace out.